Hello, and welcome to the latest Market Insider of the Toronto Real Estate Podcast. My name is Ralph Fox, and I am the broker of record at Fox Marin, and I will be your official host today in lieu of Ian Busher. We've got our two favorite superstar Fox Marin buyer agents here to shed light on the dynamic shifts and trends we're seeing as we kick into high gear into 2024. From the overall market activity to the nuances in buyer behavior, we'll address it all today. How are listing prices stacking up against last year? What challenges are buyers facing? And are condos actually outperforming single-family homes? We'll talk about that and more, and what strategies are winning in this market. We're answering these questions, and we're bringing you the real deal boots on the ground perspective. As always, please be sure to like, comment, subscribe, and we appreciate you and your support as we continue to grow this channel. Good morning, Reuben and Jessica. How are you guys both doing today?
Doing great, thank you. How are you?
I'm pretty good. Reuben, how are you feeling?
Good morning. I'm good.
All right.
How are you?
Good. Everyone had their coffee and Wheaties?
Yes, I have.
Okay, perfect. So let's get into it. Let's talk about overall market trends right now that we're seeing. So, and I'll let you guys decide who wants to take this one first, but how would you describe the overall activity in the Toronto real estate market, what you're seeing very, very early on in 2024 as things start to ramp up?
It's interesting because it is very, very early on. And I think a lot of people are very hesitant to make bold decisions right now because they're navigating through uncharted waters. But what I've observed, especially after January 15th, is there was a lot more eagerness and excitement and positivity to move forward as a buyer in this market. And this past weekend, especially, which was the weekend of January 19th to the 21st, there has been a significant increase in both the number of showings that I've observed and offer submissions. I mean, Saturday and Sunday, my inbox was full with offer registration notifications. And I found that very interesting because a week prior, things seemed very, very slow. And I was getting a lot of panicked emails from buyers asking me where all the inventory was. So that's slowly starting to shift and change. And another key indicator that I always observe whenever I'm trying to determine where the market is heading, open house activity. So on Saturday and Sunday, I sometimes find ourselves doing our showings during a public open house. And I think I showed 2 properties in the middle of an open house, and both of them were slammed. They probably had anywhere from 10 plus people in them during our own tour, which is not something that we've been used to seeing, at least in Q4 of last year.
For sure. And Reuben, what are your thoughts so far on 2024?
Yeah, I agree with Jess. Pretty much everything she said, with the exception of, I actually think from what I've seen in the clients that I've been working with and showing activity that I've observed, that this actually started at the end of 2023 in December. And while activity and eagerness, as you put it, Jess, really, I agree, picked up considerably over the past 2 weeks. There were definitely trends and signs starting in December that is where we were going to be headed at the beginning of this year.
And Reuben, can you elaborate a little bit more on trends, what you mean by trends and signs that you're seeing?
Yeah, I think it really comes down to showing activity and conversations, both with buyers and with listing agents on sellers' expectations. And it really seems that while kind of the end of the summer through the fall, everybody was kind of in one mindset. Once I guess a real winter hit, things started shifting a little bit for both buyers and sellers alike.
I am in a little bit of a bubble right now because the majority of my clients are condo buyers. And I think everyone knows that condos really struggled for the last several months. So the trend that I'm seeing is that condos are now very slowly but surely starting to pick up again. And the type of condo that I've observed to be the most coveted is the larger 2-bedroom condo that is conducive to a young family or a couple that potentially got priced out of the freehold markets. So it's been interesting to see those start to move. And it's been interesting to see even inventory that was terminated at the end of last year being relisted at the beginning of this year and actually moving at the same price point that it was listed for in Q4 of last year.
Yeah, it's interesting. Like, we have a few low-rise houses on the market right now, and one of them really struggled in terms of activity, especially in November, December. And since the start of the year, it's had basically a showing every single day.
Wow.
And so we're seeing that not just in condos, that uptick in activity, but we're seeing it in houses as well. But I think low-rise is leading the way, detached and semi-detached. And generally, what we've always seen in the market and what we are probably likely to see unfold as things start to heat up in the market is that gap between low-rise houses and condos. And once that gap becomes big enough, meaning the price of a low-rise house versus the price of a condo, due to affordability, it will start driving demand back into the condo market, and you'll start to see the condo market take off, even though there is a glut of inventory, a little bit of a glut of inventory currently sitting on the market. So that's a trend as well to watch unfold over the next 3 to 6 months. But going back to what you guys were saying about the trends that you're seeing, there has been a dramatic shift from buyers, sellers, condos, investors, low-rise homes, like across the board in sentiment. And we really did see that shift really start to change in December. September, October, November, very negative. A lot of people really were going into sort of hibernation mode. You know, you have fight, freeze, or flight during times of uncertainty or times of fear. And during this time period, I really saw a freeze happen basically across the board. And that's essentially what the market did. And now there seems to be an understanding that we are at the end of this interest rate cycle. How long until that shift happens, nobody knows for sure, but there really is a strong narrative that this is finally coming to an end. And I think that is driving a lot of people who've been sitting on the sidelines, regardless of their circumstance, to start reconsidering their options and try and get ahead of things, especially if they know things are going to heat up. And so the conversations we're having are far more positive and active and forward moving than we were seeing certainly 3 or 4 months ago. So I would say there's been a dramatic shift. Inventory levels. How are you guys seeing inventory levels? And I think one of the ways to really talk about it, because inventory is always such a key topic of conversation when it comes to Toronto real estate, is compared to the last few Januaries, we can only really say anecdotally because we don't have the stats for January 2024, but 3 weeks in comparative to past years, what are you guys seeing?
It does very much seem to be in line with what I saw in past years, maybe ever so slightly slower, but I still think we're still so early in the year to really pick up on those key trends and really get an idea of the stats, as you said. But, and this might be perhaps because I've been so used to refreshing my MLS screen every day and truly seeing nothing.
Yeah.
It seems like that quality, new, fresh inventory is finally coming online again. And my buyers have a little bit more options than we've been used to seeing. So I've been really happy about that. And there's nothing more daunting than seeing new inventory and then realizing that it's just a refresh listing that has been online for months. And that's really what December was all about. It was just the same listings being relisted and terminated over and over again. And now we're starting to see that fresh new property listings, which is great. And hopefully it's a trend that continues because we definitely need it.
Yeah, I agree. I think that compared to last year, compared to the year prior, we're probably slightly below in terms of the new listings that are coming online. But when you compare it to the past 6 months or even last fall, there is quite a bit more. And like Jess said, I have clients that we would touch base like 4, 5, 6 times a week and be like, "Hey, you see anything? No, you? No." And now it's, oh, we actually have places to go and see. And they have clients where, sure, we talk every day, but I might not see them for 3 weeks because there's just nothing to show them. And all of a sudden I'm out with them 3 or 4 times in a week.
I always try to highlight with clients the value of having options. So whenever I take a client out to see 3 or 4 listings in a day and 2 of them are real opportunities, I'm very excited. And I'm like, guys, this is amazing just to even have these options, because nothing is worse than operating in a market where everything is in favor of the buyer and you have all of this leverage and power to negotiate, but nothing is online. So that's been really nice to see.
It's also a very different experience if you're a buyer. It can be a first-time buyer or somebody who has a lot of experience with buying and selling properties. If they're just starting their search out now versus somebody who's been looking for 6 months on and off. Because somebody who's been looking for quite a while will appreciate a scenario where there is lots of inventory or choices per se, versus somebody who's just starting out and thinks that, that's just the way it is.
Status quo.
Because it really isn't, doesn't ever really seem to truly be in Toronto real estate. Okay, well, I think that's a good question. The last one I have sort of in this segment is, what are you seeing with buyer priorities, both for low rise and for condos? They can either be active buyers or they can be conversations that we're having with clients or potential clients. What are their priorities, or what are the things that they're really focusing on compared to what you've seen in prior years? Has there been a shift? And if so, what have you seen shift?
What I've observed with my own personal pool of buyers is that there is a much stronger emphasis on purchasing a property that affords them that longevity, a place where they could live comfortably for 5+ years, ideally 10. And I think the reason why that is of the utmost priority right now is because for the first time in decades, we are starting to see real market cycles. And I think people are more aware of the importance of having an asset that they can ride out in any adverse market conditions and not be forced to sell. And I think people for the first time have seen that you can't always have short-term goals and do well financially on your real estate investment. So having that property that can allow you to stay there comfortably for 5, ideally 10 years, regardless of what happens in the market, there's always going to be those small ups and downs, but long-term, there tends to always be an upward trajectory. And my own clients have been a lot more focused on that and aware of that, which I think is great, because that's what we try to drill down with all of our clients whenever they're planning their real estate investments. So larger properties have been top of mind for sure.
With room to grow.
Yeah.
Yeah. And it's interesting because it's not just buyers or potential buyers. It's also real estate agents as well, who in their careers, they've never seen a down market. They've never seen a moment where somebody has to take pause about whether they should buy or continue on in their home, because we've never been in that type of a climate. And if you haven't experienced it, you don't necessarily think it could happen. And so this is really, I think, going to bring in a whole new breed, to your point, Jess, which I think is awesome, of buyers who've now seen a full cycle, full interest rate cycle, a full cycle of actually a little bit of fear sprinkled into the Toronto real estate, which is usually FOMO, but now it's actually been a little bit of fear. And I think they'll be a little bit more thoughtful with their long-term purchases, as opposed to just trying to get in.
Yeah. Well, it's interesting, because we can see the MLS history. Even our clients can see the MLS history with all the crazy apps that are out there now. But you'll see a condo from 2019 that was purchased and it is selling for less today, or even 2020 or even 2021. And when a buyer sees that, it scares can I say crap? It scares the crap out of them. And they're like, oh my goodness, the rhetoric for so long has been to live in a condo for 2 to 3 years. I'm most certainly going to earn appreciation, but that's not always the case, even if you have an amazing condo. So seeing that play out now, it really scares them. And it's a reminder to tread very carefully about the type of investment that they acquire and position themselves to be able to ride out any downward market cycles.
And it's interesting because we were talking to a client who is looking to purchase another house. They're actually looking to buy a house, but they have a condo. And they were like, we bought at the height of the market at the end of 2019, and we're looking at prices and they haven't gone up that much. And we're kind of a little bit have a level of regret. And I just reminded him, I said, okay, well, if at the end of 2019, you said In the next 3 years, the Toronto real estate market is going to face, number one, global pandemic, number two, a complete foreign buyers ban, and number three, a 500 basis point increase in interest rate in 18 months. Pretty much every single expert would say that the whole real estate market would just collapse on itself because it needs to survive on cheap borrowing and it needs to survive on immigration from foreign investors. And all of that stopped. And yet the market did incredibly well and showed a tremendous amount of resilience, especially comparative to so many other asset classes, given that this is an asset with utility that you can actually live in and pay down your mortgage, not somebody else's mortgage while you're living there. So, and then you take in the principles of leverage and everything else. So even under such difficult circumstances, when you start to take the big picture into consideration and you look at all other avenues of things you could have done as an investment with your money, it still performed incredibly well under such tough constraints. And so if you want to talk about a stress test, and I said this before, we just lived through one in the Toronto real estate market. And so it's really, really interesting that it's a reminder of what can happen, but it's also a reminder of how great of an asset this is to own when it's really pushed to its limits. Rubes, anything you want to contribute to that?
Well, I think the interesting thing, and you do see, like Jess was saying, there are a lot of properties that sold in 2019, 2020 that are selling at or below what they would sell for today or what they're listed for today. And I think the thing to keep in mind is that buyers need to make smart decisions. And whenever I start off with a buyer, and I think all of us, it's always about finding the right balance between the lifestyle and the investment and affordability, just the overall financial side of the transaction. And I think buyers are going into it right now thinking, okay, I actually need to favor the financial side more than I need to favor what type of amenities my building has or like the more flashy things that when the market is going strong, sure, they'll contribute and then bump up the sale price. But in a more stable market, nobody cares how big the pool is in the condo or what the view from the rooftop is or whatever it may be, how flashy the party room is. And so in 2024, comparative to years where people were just kind of doing everything to just get in, buyers are much more cognizant of the financial end of the transaction and how that will carry them forward.
Sure, like an extra $50,000 3 years ago at interest rates at 1.5%. Yeah, throw another 50,000 on the barbecue. Like, why not? Sure. And now it's like, oh my gosh, that's going to cost me $150 a month or whatever it works out to. So yeah, people are way more thoughtful, and as it should be, it really is becoming something that's really important when considering offering on a property and how much. And I think some of that got lost. So what have you guys noticed in any changes in the bidding process for competitions for properties? Have you seen any shifts right now with that?
I've personally seen an increase in the number of offers, both with properties accepting offers anytime and properties that have a dedicated offer date. There hasn't been too many precedents. Again, we're still so early in the year, but I think of the 3 properties that I tracked with dedicated offer nights, they actually all got 8 offers. So I don't know why 8 is the magic number, but it's been really interesting to see. And the other data point that I like to track is the number of offers relative to the final sold price, because the trend that I've seen in previous years is that first competition increases, but the price point still kind of stays the same.
Yep.
The price points don't really get pushed up until about a month or so of that consistent activity as people start to pick up on the fact that they actually do need to be aggressive. And like I said earlier in the call, is that there is still a certain level of hesitancy in the market, and people are still somewhat afraid to make bold decisions or be the first to make a decision. But that herd mentality is slowly starting to kick in as soon as the first person jumps, everyone else tends to follow. Even though I'm still seeing a high volume of offers relative to what we're used to seeing a month ago, I'm not yet seeing those staggering sale prices that don't make sense, which I think is a good thing for buyers because they still have time. But if history is a guide and we see the patterns today play out like they have in previous years, then I'm fairly confident that we will see an increase in the average price points in the next couple months, especially as we go gear closer to the spring market.
Yeah, I think you also have to break it down into property type. Freehold properties continue to be able to successfully implement the offer night scenario if they have a quality property, and you will have 5, 8. Yesterday, Jerome sent me a text of a property he was tracking that had 18 offers on offer night.
Jerome is one of our buyer agents as well. Actually, he was supposed to be on this podcast, but he's not feeling so well. So just wanted to give context for those that are listening and or watching. Jerome, if you're watching, we miss you.
Feel better.
Feel better, bud.
But anyways, this property had 18 offers on it. And that's still not the norm yet. But as soon as we see that start to happen, and we know that down the line, that interest and that demand is just going to be perpetuated.
I want to make a guess. Was that house in Leslieville in the Lower East End somewhere?
It wasn't. It was in Roncesvalles.
Oh, interesting. Oh. Okay. What was the price? What was the price point of the property, Ram?
I believe it was either listed at. I believe it was listed at 159.
Really? Even at that price, it got that amount of attention. That's interesting. Yeah. Was there anything special?
I have not yet checked the sale price. I don't know.
Was there anything special about the property? Like,
it was a nice house. It was nicely renovated. There was a garage, just a 3-bedroom
family home.
Wow.
Yeah.
That's interesting.
Then I want to touch on condos briefly, because condos are sitting for longer, but they are still getting the good ones, at least, like Jess touched on earlier, the larger 2-3 bedroom, good layouts, lots of living area. But they're still getting offers. And sure, they're not selling in a week like a lot of good freehold homes are selling. Maybe they're selling in 2 or 3 weeks, but they'll get an offer on day 2 and they'll get an offer on day 5. And sellers at this point, as they're looking into the spring and summer, and where interest rates are headed, they're not willing to sell if they don't get their number. Very few sellers are under duress, but you see absolutely buyers are still out there and offering on properties and trying to get deals.
That's such an interesting misnomer that I think was really pushed by the media narrative in the fall and even earlier this year, just really pushing this idea that there are so many homeowners that are under financial duress and investors that are going to be under this incredible duress that are going to be forced to sell, and there's going to be waves of fire sales. Now, this never happened. And I think a couple of key indicators as to why, or key reasons. Number one, banks are willing to work with basically anybody. They're willing to extend out amortizations. And number two, most people who have bought in Toronto real estate understand what a struggle it was to actually attain those properties, and they understand the long-term inherent value of those properties. And so the last thing they're ever going to do is sell their homes. They may not go out for dinner. They'll make all kinds of cutbacks on discretionary spending, but they're not selling under duress. And we just, across the board, we just aren't seeing it. And if we haven't seen it now, it's not going to start. And what's interesting as a byproduct of that on the listing side is oftentimes, and we've seen this play out a whole bunch of times now, is we'll have a property on the market. It could be a condo, a townhouse, it could be a low-rise home, it doesn't matter. And that first offer could be $150,000 below the list price or the valuation of the property, depending upon the scenario. And then we just outright refuse it. And then they come up $100,000 or $125,000. And it's like, okay, well, we were testing. You're not under duress. We still want the property. We agree it's worth more. So here's a real offer now. Or sometimes it's like, okay, now that we got that out of our system and you responded in kind, now we're ready to sort of play ball in reality. So it's these checks. And going back to what you're saying, Reuben, and I think this is so true in conjunction with all of this, is that most sellers are holding the line with what they feel the prices of their properties are worth, and they're not dumping their properties. And if it hasn't happened now, it's just simply not going to happen.
The one thing that I just want to add is you can't fault a buyer for trying, because while most sellers are not under duress, every once in a while you might find that one. And so Sure, you have to strongly believe that what you're offering might work. If a buyer is at a certain price point and they're capped at a certain price point and they feel like they might have a shot to get it at that point, yeah, give it a shot.
I think that's where a strong buyer agent comes into play, because if you really want a property, you never want to try and insult a seller. You never
No.
want a seller to think that you're trying to steal the property from them. And it's very emotional. If it's your family home of 25 years or 10 years, your kids grew up there, and then some jerk is lowballing you, you may not want to play ball, or you might push even more, or your back might get up. And so I think having an agent that can read between the lines and ask the right questions to figure out what is worth proceeding with and how makes a lot of sense if you're either constrained by budgets, or you're looking for that deal that is probably not going to happen, but might.
Yeah, there's definitely a certain level of finesse that goes into scouting out those opportunities. We've even seen on the listing end other buyer agents misconstrue our sellers' expectations, and it could have easily been figured out had they just picked up the phone and had a conversation with us.
And so it's interesting how many agents, and I don't mean to be an ageist here, but younger agents think that they can do this business all on text. And, if you're a young agent and you're watching this, pick up the phone and have a conversation. You have nothing to lose.
Yeah.
So
building rapport is so important when it comes to the success of a transaction. There's been countless times where I've learned that, even when I've had that fear to pick up the phone and, call an agent that I really admire and respect, and I just, assume that he's going to be some jerk or she's going to be some jerk. And I'm like, no, just pick up the phone, have a conversation with them. And it really sets the stage for having a dialogue with the seller, even in multiple offer scenarios where you typically won't have that ability to get real insights into what they want or where you stand. So it is so important.
Jessica, you are the queen of acquisitions. You fear no one.
Well, now, but when we first started, I feared a lot of people.
But now you're fearless. I can talk about that firsthand. Okay, so let's talk about the one thing I'm so sick about talking about, because I just wish we could just move on with our lives already. It's been years. Interest rates. So how are interest rates affecting either buyer decisions or psychology right now? And are you seeing a shift? And if so, how is that playing into buyer decisions and sentiment at this point in time, early into 2024?
I think it is absolutely, but I don't think that it's because of what interest rates are at right now. I think it's because what smart, educated buyers who surround themselves with the right professionals, mortgage brokers, agents, everything, are foreseeing into the next 6-8 months. And buyers mentality, they're going, okay, well, how do I get in now? How do I get in the next 3-4 months before rates start to come down, before competition starts to increase, and before prices start to increase?
Jess, what's your perspective on that?
Yes, there's certainly a much more positive outlook on the future of the Toronto real estate market now that whispers have been passed around that rates will, at one point or another, hopefully this year and hopefully soon, come down. And there are a lot of sophisticated buyers that are trying to get ahead of that, which is great. What I am seeing play into their decision making is some people are almost relying on rates coming down in order to justify a higher price point. And to those people, I say to tread carefully, because even though rates are expected to come down, we don't know when, and we don't know by how much. So always planning for a worst case scenario is really important. But I am now starting to see buyers, both in our own buyer pool and the people we are competing with, stretch themselves a little bit more than they normally would, and justifying it by saying, well, rates are going to come down. So even though that it's difficult today, pretty soon I'll be in the clear. And I would just say, make sure that very much is the case, because you really don't know when this is going to happen. And I would say last year at this time, there were whispers of rates coming down, and I had some clients convinced that by the end of the year, there would be a decrease in rates, and that never happened. So just tread carefully.
100%. And it's so interesting because even though we've had this massive spike in interest rates, affordability, what it costs to live in your home, regardless of the home, that has not changed. In fact, it's even gotten worse. So there's no, clear path where interest rates are going to go up and the market's going to tank and, I'll have better buying power or affordability. It's really just adjusted and maybe even gotten worse, which is such an interesting thing that I don't think anybody would have predicted. But it just shows you how strong the underlying fundamentals of the market are. And what do you see in your conversations with clients? I mean, we are not mortgage brokers and we do not give interest rate or financial advice per se. We usually refer that out to one of our trusted partners. But what are you seeing with our clients in terms of what they're going with, either in terms of a product? Are they doing variables or are they going in with short-term fixed or long-term fixed? Like, what are you guys seeing?
I try not to get too involved in that because, as you said, Ralph, we're not experts when it comes to financing or mortgage advice. Typically, the conversations that I have with clients surrounding financing is prior to them actually acquiring a property. But I do find that depending on the property they acquire, they might have, the options might skew. So I don't know that I can answer that question because I really don't know.
Okay, I'm going to follow that up with another question. You bought a house, you're closing in 1 month, fixed or variable?
I'm a risk taker, so I would go variable, but there's been a lot of great arguments for going fixed. And what I tell my friends and family when we're just around the dinner table talking about it is if you want that reliability and you want to be able to plan your expenses, then sometimes it does make sense to go fixed because, like I said, I don't know that we can rely on the whispers and we don't really have all the information that we need to make a decision with confidence. We're really just speculating. And sometimes that doesn't always play out in our favor.
Rubes, you bought a place, another house, you're closing on it, 1 month, fixed or variable? One word answer.
Variable, but I'm going to go back to your first question.
One word.
No, I'm going to go back to your first question because I didn't get a chance to answer it. Any of my clients, and why 100% in line with Jess, I do not ever give rate advice, mortgage advice, anything, direct them to third-party professionals. But any of my clients who have purchased property so far this year have gone with a 3-year fixed. And that's the decision they decided to take, right around 5% on that 3-year fix. But I also know earlier on in the process that the conversation that I did have with a mortgage broker, there was a lot of thought into, okay, well, do we do a variable? And if we do really think that we're on the way down, or we will start to be on the way down, do we ride that down? And then maybe once rates are a little bit lower, maybe you lock in at that time.
Yeah, I think that's the move, my opinion.
That's what I would do. I would go ride it down and lock in slightly lower.
We refied a property January 1. It rolled over and we went with variable. It'll be interesting. TD says 2025, 2.5% interest rates, overnight lending rate. So we'll see. I've seen these predictions be so wrong though, so many times. I have a chart from the beginning of 2022 and the banks were calling for I think it was like 3/4 increases for the year. And they were all just horrifically wrong. So
yes.
Time will tell.
One thing we can learn from that is don't make decisions based on predictions.
Make them based on your own. Are there any policy changes or changes in regulations vis-a-vis potentially TRESA that may change or have an effect on the market or the way business is done?
I think there's 2 major policy changes that come to mind on this topic. One being the more transparent offer process where the seller has the ability to divulge the information or the contents of any competing offers. A lot of people think that this might actually help keep prices down or within reasonable numbers. We've had many discussions as to why we don't think this is the case, but it's interesting that I am not seeing that happening where sellers are actually releasing that information. I do not anticipate it will happen. And what we've been doing with our own clients, because I don't feel it's in my client's best interest for the contents of their offer to be released to somebody competing with them, so just so they can beat them by $1,000, is we insert a clause that essentially says if the contents of our offer is shared, it becomes null and void. And most of the conversations I've had with other agents is that they're going to keep doing things the way they always have been, which is the blind offer process. And I very fervently feel that it's in the best interest of both parties and really levels out the playing field. The other interesting policy change that has been getting much discussion is the requirement for all exclusive listings to be brought onto MLS within 3 days. For some reason, I've been getting an overwhelming amount of inquiries from buyers asking me about these elusive off-market opportunities that their friend's brother, sister, cousin told them about that they got 5 years ago at a steal of a deal. And there's two parts to this. One is that that's no longer happening because they're forced to come to MLS in 3 days, which is not a lot of time. So you're not really missing out on all of this great inventory. But the other thing is that when you think about the intention of putting a property for sale exclusively, most of the time it's because you're testing the market at a higher price point. And you don't want that price point to adversely affect the success of the listing by dragging out the days on the market. And the only way you can really determine if something's a good price or not is if you can accurately determine market value. And so often people conflate the listing price with market value. And so if you see an exclusive listing for sale for $1 million and you offer the seller $950, you might walk away thinking, wow, I got a steal of a deal, it was off market, no one was there to compete with me. But really that property was worth $900,000 the whole time, but they just didn't have that missing piece of information. Because any seller who knows they have a great property, it is always in their best interest to expose it to as many people as possible. So I just think that people really underestimate how sophisticated sellers are. And there aren't always these magical opportunities that exist offline. And now more than ever, you have those assurances that if you're feeling that way, just wait 3 days and it will be on MLS, which I think is a great thing.
Well, furthermore to that ruling is that if you have it as an exclusive, you're not allowed to share it prior to going to market with anyone other than people at your brokerage. You cannot share it publicly. You cannot share it to the greater realtor community. It has to stay contained. And so it's basically killed the idea of having an exclusive market, which was never really this robust secret society that some people thought existed, much like the secret website where the super good deals are on real estate that nobody else knows about. Those don't exist either. And so,
I mean, I will say that there probably is a benefit to exclusive if you're in the ultra luxury market.
Yes, for sure. And that's where it happens.
Morgan,
but
anything,
even there, it's governed under the same legislation that's just come through. Rubes, what about you?
I was going to touch on the transparency of offers, and because I've seen it a lot, and I feel like everybody, Jess mentioned that there's a clause that you can insert into an offer that essentially says, sure, the legislature says you can share the contents, but if you do, my offer is null and void. And that's been in every single offer I've submitted or received since that came into practice on December 1st. And I just really don't think that that many people are going to choose to go with a more open process.
And as we've seen, if you've read the studies out of Australia and New Zealand, it is not where they have like this open bidding as an option. It has not helped real estate prices one bit. They're appreciating almost at a faster rate than they are here. So it's much to do about nothing. There's a lot more paperwork involved and chances for a lot more actually less transparency, because sellers can change their mind midway and in terms of if they want to disclose pricing or not, depending upon whether that condition is in the buyer's offers or not. and how they convey this information. There is no set way. So it could end up of a lot of he said, she said scenarios. And I think the cleaner you can have a bidding process, regardless if it's opened or closed, the more everybody is going to benefit. So yeah, I don't think it's really going to have too big of an impact. And I think we're all in agreement that it's really just going to mean business as usual, despite all of the posturing that this legislation is trying to enact. Going back to buyers right now, because this is very much buyer focused, what are the biggest concerns that you're seeing expressed by buyers?
There are two things that come to mind. One is when buyers do see these properties that have come down in value in the past few years, and they're not necessarily thinking long term, and so maybe they're worried about a purchase price and what they might be purchasing a property for, and what that will be worth when they go to sell it. That I would just say, we are big proponents of long-term thinking. And so long as you are looking ahead, looking into the future, you will be okay. But the second thing, and yes, be cautious, and buyers have to be comfortable with the decisions that they're making. But I really do feel like a big concern for a lot of buyers, and a lot of buyers that I'm working with right now, is just that they will get to a point where the market is moving in a way where there are 10, 15 offers on every property, and they're not in a position to negotiate, and there's so much more competition and prices are going up. And so I think of just a big concern for buyers is that they are not able to transact to close on a property within the next 3, 4, 6 months.
Okay. And Jess, is there anything you'd like to add to that?
Yeah, I mean, I'm seeing something similar. The challenge that my clients have is trying to evaluate whether or not a property is good enough for them to offer on and give up the opportunity cost of something else down the road in fear that it will be more expensive, or to Reuben's point, they won't have as much leverage. So for them, it's been a challenge trying to ascertain if something is good enough for them to take that leap, which I think is a challenge for any buyer in any market, regardless of how things are performing. But it seems like now there's a real fear that we're on the brink of change. And so that's why I tell my clients is that if something really, truly works for you and everything makes sense, then yes, you owe it to yourself to jump in with both feet, because there's no guarantee of what tomorrow might bring, both in terms of inventory and in terms of market conditions. But if it's not 100% right, then it also behooves you to really think about your options and sometimes take that risk. And a lot of clients that both need to buy and sell, what I've been telling them is even if the markets do pick up, you'll benefit it off the sale of your own property, which will then offset the increasing costs on your buy, presuming you're selling first and then acquiring property.
Awesome. Okay. So I'm going to ask you each a 2-part question. And we did a podcast at the end of 2023 talking about your projections for 2024. We are now in 2024, albeit early days. So I just would like to know where you think we will be, the market will be by the end of the year. And has anything changed, or have things just been more reinforced with what you were predicting would happen now that we're already into 2024?
Okay, I'll take this one.
Okay, you're up.
We're
Be
both
fearless queen of acquisitions.
For me personally, this is exactly what I anticipated. Mostly because we've seen this before. We've been here before. There's a real pattern that plays out in January, February that goes into the spring. I fully expect activity, offers, and prices to be up by the time we're in May. What happens in the summer and into the fall, winter, I can only rely on what we've seen before again, which is another softening. Yep. I don't think that we'll see huge declines in prices like we've seen in past years, especially if rates come down, which might reinvigorate the fall market, which we haven't really seen that crazy fall market in a few years. So I think that'll be exciting. But I certainly don't see the market declines that we've been used to seeing in previous years. And I think overall, year over year, everything will be on an upward appreciation by double-digit numbers.
10+%?
10+%, yes.
10 to 15 or 15 or higher? Over under.
I do think that some asset classes will garner as much as 15%.
Which would be?
I do think that the lower hanging fruit that still offers people the ability to stay there long term, like townhomes, which is interesting because townhomes, based on the last market data, were up 20+% since the same time last year. That was pretty shocking to see. So I do think that they will continue to be the leader in appreciation, just as people require more space. And again, reinforcing the need to have a property where they can stay in long term and ride out any adverse market conditions or fluctuations and just live in this great city that we call home in Toronto.
Awesome. Okay. So Reuben, take it away and help sort of us wrap this up.
So I'm gonna in our podcast at the end of 2023, you put me on the spot and I wasn't expecting to be asked to say a number of what percent of appreciation will the market be up in next December. And I also really think that now more than ever, really, there will continue to be two different markets. And so I think I will stick to my guns and say that the freehold market could very much be up 10, 15% by the end of the year. I don't think the condo market will be nearly as close. I think it'll probably take another year for that gap when it widens to then come back up, as you mentioned earlier, Ralph. And so because of that, I'm going to lower my overall expectations and say, I think the overall Toronto real estate market will be up maybe somewhere around 7-8% by the end of the year.
Which is in line with historic norms.
Exactly.
Yes. Awesome.
But I fully agree. Townhomes will, I think, appreciate the most. People are going to quickly lose their ability to purchase semi-detached or row houses, and they're going to need more space than a condo will afford them. So I'm all on board the townhome train.
Okay, awesome. And do either of you have any last comments or thoughts to sort of finally wrap this up and put a bow on it for today?
I just think that if you are a purchaser and you are not active, but you want to be, I think now is a great time to get started because we're seeing that pickup in quality inventory. And we're not quite at the point where prices are starting to increase. And obviously, we don't know when that is going to occur or when interest rates are going to come down. But I do think that when that happens, prices will ultimately be higher. So it's definitely in your best interest to try to get ahead of that. And like I said earlier on the podcast is if something looks right and feels right, you owe it to yourself to jump in with both feet and not fall into the analysis paralysis and wondering if there's something else that's better out there because there really is no guarantees.
Rubes?
I'm going to say it's never too early to do your homework and be prepared. Even if you don't think you're in a position to do something for a year, 2 years, speak with professionals, speak with a mortgage broker, get your ducks in a row so that when the time does come, you're informed, you have opinions, and you're ready to, as I think both of you have said many times on this podcast so far, jump in with both feet.
Amazing, amazing. Well, what a great way to wrap up this conversation. Jessica and Reuben, thank you so much for joining us here today on the Toronto Real Estate Podcast. It was a great conversation as we approach the end of the first month of 2024, and what a month it's been. If you're watching this and you've made it to the end, please don't forget to like, comment, and subscribe for more market insider updates here at Fox Marin. We appreciate your support as we continue to provide you with valuable insights. And until next time, stay savvy, stay warm, and stay positive. And we hope to see you on the flip side.